Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein with your financial market update, and this is for Wednesday, the 13th of September, 2017, just around 3:32 p.m. Central Daylight Time. They're just reopening now the different stock indices, and you're looking at about where the market is going to have the settlement price. Won't matter what it does from here. As you can see, another down day in the gold market, silver market down as well. The dollar had an up day at the expense of many of the currencies. We're going to hear tomorrow from the Bank of England as to whether or not they're going to raise interest rates or not. Some of the data today puts that very much in question. It's the reason you were down 87 points. But rather than me get into that whole argument, let's see tomorrow what they actually come out and say. That'll give us an idea about it. And the energy sector, gasoline is still under pressure. No surprise there. Should be no surprise to you because it got overpriced, and now you're getting to the first demand for the crude oil as the refineries are beginning to start up again. So the crudes come back. The question on the crude is, where's the trade top? I think what we've done in crude as technicians is we can say in the odd contract, the temporary trade bottom's 45.60, that low we made just recently. Now the question is, where's the top? Is it 50, 51, 52? It's probably in a range, something like that, but let it develop and then we'll know more to say. In the bonds and the notes, as the market is getting ready not only for the Bank of England, but for our FOMC meeting next week, you're taking what? You're putting interest rates back up a bit. And this is the old cycle. We put them up in front of the FOMC. The Fed doesn't do too much, and then they seem to slip back. That's been what's going on. So as we come to the Russell 2000, and that's what we're looking at, as you can see, this market's coming back up into an area here at 1427 that is challenging this old high. And remember, this is a weekly area chart of closes. I'm not looking at the highs and lows intraday, just of the closes. And you can just ballpark it. You're right into that resistance zone. As we come up on a daily area chart of closes, on a daily chart, you got your best thrust that you've had, and you can see that right now on the chart. That looks good. When we look at a daily bar chart, you can see that the highs are really back up here in the 1450 level. You're not there, but you're only 23 points away. And these are the kind of markets that, you know, I go on Fox and all the different stations around the country, and there's quite a few of them. It could be Bloomberg, it's BNN, it's SkyBiz. I mean, I do a lot of television. And to make a long story short, I have been consistent. I have been saying that even on these breaks, these are not going to last. The market's got no other place to go. I haven't changed my opinion. Add to that, and I do realize valuations, where they're at and so on, but I look at corporate earnings, and every quarter that we come through sort of okay. We don't have a lot of inflation, but we're making money in these corporations. And as long as that happens, you find that you get value to them. And with low interest rates, well, people are moving. I am the first to agree that at some point this bubble has to burst. You're not going to keep low interest rates in a stock market running away. Most analysts think it'll be interest rates that eventually begin to move. I can't deny that. I'm just not seeing it yet. In the September Russell 2000 swing lines, now this is the chart without a swing line. This is the chart with it. You've got a pattern of a lower low and a higher high. So even though you've moved all the way up here, this correction produced an event where you made a lower low than the previous low, and now you're rebuilding a pattern in the chart. At the same time, you have the 18-day moving average of closes in red rushing up to the 100-day average of closes. When this got underneath it, you had a break. If it gets over it at a time when prices are trading over both of them, I would expect more of a rally. It's called a bullish crossover or a bearish crossover, and that's what we have. And I think that they're important, and you look at them. In terms of where might the market be headed right now, if it gets some good news right now and wants to move forward again, 1430, 440 tonight at least, is the upper Bollinger Band. That'll change a bit in the morning, but that's the number. Let's assume the market breaks. Where might it find support? Well, what was resistance, and a point here, as you can see, it was fighting against the 100-day average on the way back down. That might be a likely target. If not, I would think the 18-day average. But remember that 18 each day is closing in on that number, so you don't have many days left. In terms of slow stochastics, you have an event happening. Both numbers are over 80. Here's the values. What about yesterday? Both numbers were over 80. What about the day before? Not. You got a 78 reading on one. Tomorrow's very important. The odds of the market embedding are not good. Markets most of the time get up to that point and fail. They tried to fail again here, as you can see. Then they went back for a short point, especially in the Russell. So it's different than the S&P and the others. So the odds don't favor it. So be a bit cautious here. How does it not do it? It doesn't do it by having a break in the market. When you come to the S&P, this market likes to embed. And if you take a look at the two numbers here, both are over 80. Day before, both are over 80. And the day before, they're not. Interesting. Are we going to embed? We are up at a resistance point, the upper Bollinger Band. The trend is up, the bias is up, but you are very overbought. What about the NASDAQ? Not just overbought, can't embed. Actually, if you go back to yesterday, right away, both numbers weren't over 80. Just today are they at this point. But you are in an uptrend. So we have markets that could embed. They're getting into overbought territory. In fact, they are all in that category right now, because to become embedded, you first got to become overbought. And if that's assuming it's a bullish embedded reading. Dow Jones, not embedding at all. Upper Bollinger Band, uptrend. So they're vulnerable. That's the point. Doesn't mean they have to break. They can start embedding and go higher. Who might argue when you've got record highs? Understand that. So when you pick up a chart, there's two ways to look at it. I'm the first to say this is a bull market, but I have been saying it for a year. Now the question is, as a trader, how do you not get caught buying it here, have to ride down that pressure? And as you know, there's leverage in futures, and what happens is you get yourself knocked out. It's one thing you say you're an investor, I'm just buying the market, and I'm not even looking at the papers, that's what I'm doing. It's another trying to be a trader. And as a trader, you're overbought. You can see that here, into resistance, certainly have an uptrend. You got higher highs, higher lows, and an upside bias. In the VIX, you have a bearish play still at work, but not embedded. Oversold. It's a flip-flop. And as I pointed out to you, every time you get down into this 10 area, getting a bit lower is so difficult. To get to 9, you have to have a 10% break. It's not easy to do that. And that is why this market fights it. So you just have to understand that where the pressure is, but you're not seeing people run for the hills. The VIX is just not going crazy. In the TLT, we are now at the point on this where the market has left this uptrend. That's over. And the market is now in a corrective mode, not in a bear trend, oversold, might make a run for the lower Bollinger Band as you're washing out this group of people. When I look at the T-bonds, same identical story. What leads me to it? Well, if you go back here, look at how you were just staying over that 18-day average until the last 2 days. Let's go to TLT. Look how long you were staying over it, a whole month, and finally you're giving ground. Why are you giving ground all of a sudden? Gee, let me think about it. It starts with an F, second letter is O, M, C, FOMC. Yeah, the market is getting itself ready for whatever the Fed may say, the wording, how they say it. Are they going to give us a game plan? Are they going to say things like, hey, it doesn't matter, we're still very much on track. We realize inflation's not showing itself, however, we want to be ahead of it. Or are they going to hide with the words, we're in a transitory part of the market, but the market is strong enough to let us start working off our balance sheet. What does that do to the market? You've got to be ready for those events, and the market's setting itself up now, getting ready for next week's events. The December T-note, same thing. Look at how you were over the 18-day average for the longest period, and you've given that up. So that's the first thing I look at on the chart. Charts rarely go from this bull trend and are all of a sudden in a bear trend, by the way. Dollar index surprised me today. I thought the market was going to the 18-day average of closes, but I did not think it was first going to make a lower low than yesterday and then make its run to get that. That is bothersome on the chart. Something else I want to alert you to. Tomorrow, I'm going to start dropping the Septembers of everything and move to the Decembers. It's time to do that. So the open interest and volume is making its move now. I'm going to spend the rest of the afternoon getting the charts ready. So be ready for that. But I wanted to say, I just don't want to disappear on you with these charts. But if you look at volume and open interest, it is now time to make the move. And you wait in these markets to almost the last minute, and then you make your move because you want to be certain you got the volume and everything in play. You're there. So we have a market that's neutral. You've got the swing line up, but prices are under the 18-day average. Momentum is pointing to the upside, and it carried the market to the 18-day average. Got a neutral market all of a sudden there. In the SEP euro currency, guess what? Neutral or bearish? Well, if you take a look here at the 18-day average of closes, it's 119.06 roughly. We're 118.88, so I'm going to call this trend down. Lower highs, lower lows under the 18-day average, momentum pointing down until today's high is taken out, at least that's the initial pattern, and on the dollar until today's low is taken out, the trend is up. Two different ways to look at it. The Aussie dollar has been in a corrective mode. The market has got a momentum pointing down. You're pulling back to the 18-day average. The last break low was 79.63. You have not taken it out. So it's interesting, but as I said, I'm going to move to the D's contract, and we'll see what that does. And on the yen, yay! I gave you a pretty good idea, and it worked out nicely. You went from the lower Bollinger Band to the upper, and I said, you know, the way this market's letting go, and the fear came out of the market with North Korea not doing a darn thing, even though they're starting to talk a little nasty today, so what? Nothing's really happening. I did read that they're starting to get ready for another nuclear test in an area. They're moving the trucks and so on. We don't know if they'll do it. There's going to be a big price to pay if they do financially. But right back down to the lower Bollinger Band. Yesterday I said if it did that, it might find that secondary support at the 100-day average. Bingo. So this market is now totally neutralized itself to the up and the downside, and I think it's just waiting to see what next. I mentioned on the crude, where is it headed? You have a market that this arrow I'm going to take away, but I wanted it there to show you how the market had been setting itself up, okay? We had a lower low, a higher high, then we came down. Then right here is the market got the higher high yesterday, Tuesday. That arrow kicks in, and now you're following suit. I'm not looking for a lot more than that 49.70 where the resistance will come in. In the gasoline, remember the idea of what momentum does in an oscillator? It often leads price, and it has been dropping down, and price has been going with it. That is the point that I'm making. We have seen now two stabs for good support towards the 18-day average of closes. Still haven't taken it out. Should the market take out 160.06 and close under it, you would have lower highs, lower lows, momentum pointing down, the bias down. That chart would all of a sudden get very ugly real fast. In the nat gas, we have warmer temperatures coming right now. I looked at the 15-day forecast. That's why this market's up. The market is suddenly, Chicago's going to be between 87 and 90 this weekend, and that's going to go out east. So we're getting that last blast, Indian summer, whatever people call it, where the market has gone now from a lower Bollinger Band to the upper, and notice the 100-day average fighting itself there. Too hard to figure out what to do with that, so sometimes you don't do anything with them. Let's talk about price counts, because you're going to get a bunch of them now, and it's very, very often that you get them. And let me show you what these work out to be. You get a market that gets a big run in it. All of a sudden it falters, comes back up, doesn't make a higher high, starts down. You get a series of what we call measurable counts as to where the market might head for support. Often the first count is hit, and I mean often. Second count, not as much. Third count, not as much, but it gives you ideas as to where they're at. You have sideways market. You break out to the upside. You get to the first count. Then you get the second, the third. We teach you what they are. We teach you how to plot them on a chart. Our software, in our charting software, contains it in our QT charts. I think you want to take a look at this. We've got the PDFs for you, shows you how to do the whole thing, videos, away you go. And it's free. Give it a try. See if you find this an interesting trading tool. I do. I look at it every Sunday night, actually, so I have an idea of what I'm looking at before the week begins. How do you get it? You call us 866-973-2077. Go to our website, www.iraepstein.com. You can also click up here if you're watching me on YouTube. Everything will come in from the form there or underneath us on many of the websites. It says click here for Ira's free information. Do so and away you go. I'm Ira Epstein. You have a good day.